Well, all right then. Tax evasion. Tax evasion, or tax fraud, is an illegal attempt to defeat the imposition of taxes by individuals, corporations, trusts, and others. Tax evasion often entails the deliberate misrepresentation of the taxpayer's affairs to the tax authorities to reduce the taxpayer's tax liability. And it often includes dishonest tax reporting, declaring less income, profits, or gains than the amounts actually earned, overstating deductions, bribing authorities, and hiding money in secret locations. Tax evasion is an activity commonly associated with the informal economy. One measure of the extent of tax evasion, the tax gap, is the amount of unreported income, which is the difference between the amount of income that the tax authority requests be reported and the actual amount of income reported. By contrast, tax avoidance is the illegal use of tax laws to reduce one's tax burden. Both tax evasion and tax avoidance can be viewed as forms of tax noncompliance, as they describe a range of activities that intend to subvert the state tax system. But such a classification of tax avoidance is disputable, since tax avoidance is lawful in self-creating systems. Both tax evasion and tax avoidance can be practiced by corporations, trusts, or individuals. Okay then. Economics. In 1968, Nobel laureate economist Gary Becker first theorized the economics of crime, on the basis of which authors M.G. Allingham and A. Sandemo produced, in 1972, an economic model of tax evasion. This model deals with the evasion of income tax, the main source of tax revenue in developed countries. According to the authors, the level of evasion of income tax depends on the detection probability and the level of punishment provided by law. Later studies, however, pointed at the limitations of the model, highlighting that individuals are also more likely to comply with taxes when they believe the tax money is appropriately used, and when they can take part in public decisions. The literature's theoretical models are elegant in their effort to identify the variables likely to affect noncompliance. Alternative specifications, however, yield conflicting results concerning both the signs and magnitudes of variables believed to affect tax evasion. Empirical work is required to resolve the theoretical ambiguities. Income tax evasion appears to be positively influenced by the tax rate, the unemployment rate, the level of income, and dissatisfaction with the government. The U.S. Tax Reform Act of 1968 appears to have reduced tax evasion in the United States. In a 2017 study, Alstader et al. Concluded, based on random stratified audits and leaked data, that the occurrence of tax evasion rises sharply as the amount of wealth rises, and that the very richest are about 10 times more likely than the average people to engage in tax evasion. Who would have thought? The tax gap describes how much tax should have been raised in relation to how much tax is actually raised. The IRS defines the gross tax gap as the difference between the true tax liability for a given year and the taxes actually remitted on time. It comprises the non-filing gap, the underreporting gap, and the underpayment, or remittance gap. Voluntary tax compliance in the U.S. is approximately 85% of taxes actually due, leaving a gross tax gap of about 15%. The tax gap is growing, mainly because of two factors: the lack of enforcement on one hand, and the lack of compliance on the other. The former is mainly rooted in the costly enforcement of taxation law, and the latter is based on the foundation that tax compliance is costly for individuals, as well as firms, tax filing, bureaucracy. Hence, not paying taxes would be more economical in their opinion. Evasion of customs duty. Customs duties are an important source of revenue in developing countries. Importers attempt to evade customs duty by A. Underinvoicing, and B. Misdeclaration of quantity and product description. Misdeclaration of quantity is more relevant for products with specific duty. Product description is changed to match an HS code, commensurate with a lower rate of duty. Smuggling. Smuggling is import or export of products by illegal means. Sound familiar? Smuggling is resorted to for total evasion of customs duties, as well as for the import and export of contraband. Smugglers do not pay duties since the transport is covert, so no customs declaration is made. Evasion of value-added tax and sales tax. During the second half of the 20th century, value-added tax, or VAT, emerged as a modern form of consumption tax throughout the world, with the notable exception of the United States. Producers who collect VAT from consumers may evade tax by underreporting the amount of sales. In the US, there is no broad-based consumption tax at the federal level, and no state currently collects VAT. The overwhelming majority of states instead collect sales taxes. Canada uses both a VAT at the federal level, the goods and services tax, and sales taxes at the provincial level, though some provinces have a single tax combining both forms. In addition, most jurisdictions which levy a VAT or sales tax also legally require their residents to report and pay tax on items purchased in other jurisdictions. This means that consumers who purchase something at a lower taxed or untaxed jurisdiction with the intention of avoiding VAT or sales tax in their home jurisdiction are technically breaking the law in most cases. This is especially prevalent in federal countries like the United States and Canada, where subnational jurisdictions charge varying rates of VAT or sales tax. In liberal democracies, a fundamental problem with inhibiting evasion of local taxes is that liberal democracies, by their very nature, have few, if any, border controls between their internal jurisdictions. Therefore, it is generally not cost-effective to enforce tax collection on low-value goods carried in private vehicles from one jurisdiction to another with a different tax rate. However, subnational governments will normally seek to collect taxes on high-value items, such as cars. Objectives to evade taxes. One reason for taxpayers to evade taxes is the various personal financial benefits that come with it. However, the degree of evasion of taxes is likely attributed to how much risk an individual is willing to take. Walschatzky's exchange relationship hypothesis presents as such a sufficient motive for many. The exchange relationship hypothesis states, taxpayers believe that the exchange between their taxes and the public good or social services is unbalanced. Furthermore, the little capability of the system to catch tax evaders reduces associated risk. Most often, it's more economical to evade taxes, being caught and paying a fine as a consequence, than paying the accumulated tax burden over the years. Thus, evasion numbers should be even higher than they are. Hence, for many people, there seem to be moral objective countering this practice. Moral objective. Cute. Government response. The level of evasion depends on a number of factors, including the amount of money a person or corporation possesses. Efforts to evade income tax decline when the amounts involved are lower. The level of evasion also depends on the efficiency of the tax administration. Corruption by tax officials makes it difficult to control evasion. Go figure. Tax administrations use various means to reduce evasion and increase the level of enforcement. For example, privatization of tax enforcement or tax farming. In 2011, HMRC, the UK tax collection agency, stated that it would continue to crack down on tax evasion, with the goal of collecting £18 billion in revenue before 2015. In 2010, HMRC began a voluntary amnesty program that targeted middle-class professionals and raised £500 million. Corruption by tax officials. Corrupt tax officials cooperate with the taxpayers who intend to evade taxes. When they detect an instance of evasion, they refrain from reporting it in return for bribes. Corruption by tax officials is a serious problem for the tax administration in many countries. Level of evasion and punishment. Tax evasion is a crime in almost all developed countries, and the guilty party is liable for fines and/or imprisonment. In Switzerland, many acts that would amount to criminal tax evasion in other countries are treated as civil matters. Dishonestly misreporting income in a tax return is not necessarily considered a crime. Such matters are handled in the Swiss tax courts, not criminal court. In Switzerland, however, some tax misconduct, such as the deliberate falsification of records, is criminal. Moreover, civil tax transgressions may give rise to penalties. It's often considered that the extent of evasion depends on the severity of the punishment for evasion. Privatization of tax enforcement. Professor Christopher Hood first suggested privatization of tax enforcement to control tax evasion more efficiently than a governmental department would, and some governments have adopted this approach. In Bangladesh, Customs administration was partially privatized in 1991. Abuse by private tax collectors, see tax farming below, has on occasion led to revolutionary overthrow of governments who have outsourced tax administration. Not a bad idea. Tax farming. Tax farming is a historical means of collecting revenue. Governments received a large lump sum in advance from a private entity, which then collects and retains the revenue and bears the risk of evasion by the taxpayers. It has been suggested that tax farming may reduce evasion in less developed countries. This system may be liable to abuse by the tax farmers, seeking to make a profit, if they are not subject to political constraints. Abuses by tax farmers, together with a tax system that exempted the aristocracy, were a primary reason for the French Revolution that toppled Louis XVI. PSI agencies. Pre-shipment inspection agencies, like the Société Générale de Surveillance SA, are in business to prevent the evasion of customs duty through under-invoicing and misdeclaration. However, PSI agencies have cooperated with importers in evading customs duty. Bangladeshi authorities were found guilty of complicity with importers for evasion of customs duties on a huge scale. In August 2005, Bangladesh had hired 4 PSI companies: Kotekna Inspection SA, SGS Bangladesh Limited, the Bureau Veritas BIVCA Bangladesh Limited, and Intertech Testing Limited, for 3 years to certify price, quality, and quantity of imported goods. In March 2008, the Bangladeshi Board of Revenue cancelled Kotekna's certificate for serious irregularities, while importers' complaints about the other 3 PSI companies mounted. Bangladesh planned to have its custom department train its officials in WTO evaluation, trade policy, and ASYCUDA system risk management to take over the inspections. Cotecna was also found to have bribed Pakistan's prime minister in order to secure a PSI contract by Pakistani importers. Parties were both sentenced in Pakistan and Switzerland. Tax evasion and inequality. Generally, individuals tend to evade taxes, while companies rather avoid taxes. There is a great heterogenic among people who evade, as it is a substantial issue in society. That is, creating an excessive tax gap. Studies suggest that 8% of global financial wealth lies in offshore accounts. Often, offshore wealth that is stored in tax havens stays undetected in random audits. Even though there is high diversity among the people who evade taxes, there is a higher probability among the highest wealth group. According to Alstadter Johansson and Zuckman 2019, the extent of taxes evaded is substantially higher with higher income, and exceptionally higher among the people in the top wealth group. Can't say I'm surprised. In line with this, the probability to appear in the Panama Papers rises significantly among the top 1% wealth group, as does the probability to own an unreported account at HSBC. However, the upper wealth group is also more inclined to use tax amnesty. Well, would you look at that? I think that's enough reading for today. Don't you think?